Okay, if you've ever built a pitch deck or, evaluated a startup, you absolutely know the pain of market sizing. It's that multi-billion-dollar question that, let's be honest, often gets a pretty flimsy $1,000 answer. But what if that whole process could be, well, completely reinvented? What if weeks of pure guesswork could be squeezed into just minutes of rigorous data-backed analysis? That's exactly what we're going to dig into today.
All right, let's just get right into it. Every single founder has felt this headache. You spend weeks, sometimes even months, trying to nail down your market size. Your TAM, SAM, and SOM. You're trying to cobble together reports, maybe you pay some expensive consultants, and you end up with a number that feels more like an art project than a science experiment. And for investors, it's just a constant battle trying to figure out where these often huge numbers even came from in the first place.
And the difference here is just it's stark. The old way is a total black box. You wait forever for a consultant, you pay a fortune, and you get back a single number with assumptions that you can't really defend. The new approach, though, it promises the exact opposite. We're talking instant results, transparent sources for every single claim, and a really rigorous analysis that gives you a defensible range, not just one single fragile number that can get picked apart in 2 seconds. And this, right here, this gets to the absolute heart of the problem. The second a savvy investor asks, "So how'd you get this number?" That's when a fragile model just completely falls apart. You see, a single point estimate is really a single point of failure. It just doesn't have the depth or the credibility you need to build real confidence. So, okay, how do we fix this whole mess? Well, by using AI to do all the heavy lifting. This is where a platform like MarketSizing.AI comes in, and it's designed to completely automate this process and deliver what it calls investor-grade projections. And here's where it gets really, really interesting. Look, a 15-minute turnaround, that's a game changer all by itself. But it's not just about speed, it's about the depth. The data is all backed by actual research. The projections use these sophisticated statistical models like Monte Carlo simulations, and it even builds out financial forecasts for you. So this isn't just some market-sized calculator. It's a full-on projection engine.
So how does this thing actually work? I mean, how do you go from a simple idea that's buried in a pitch deck to a full-blown financial model? Let's take a look under the hood. The whole workflow is actually incredibly straightforward. First, you just upload your pitch deck or even just a website URL. The AI reads it, pulls out all the key metrics. Then it dives into the research phase, finding real cited data to back everything up. After that, it runs thousands of simulations to create these really robust projections. And then, boom, you export a report that's ready for even the toughest boardroom questions.
Now here's the secret sauce, the key to how it works so fast. It's a 2-stage process. The system instantly generates your report using what it calls synthetic data, basically smart placeholders so you can see the structure right away. But then the AI gets to work, doing all this deep research to replace every single placeholder with real, cited data. And that is what forms the foundation of a truly defensible model. Okay, so let's look at the final output and talk about how it's designed to build that confidence that investors are always looking for. Because, at the end of the day, it's all about the quality and the credibility of the report you're sharing. The report is built on something called a Monte Carlo simulation. Now, I know that sounds super complex, but the idea is actually pretty simple. Instead of just relying on one static number for, say, customer growth, the platform uses the researched range of possibilities. Then it runs thousands and thousands of simulations to map out the most likely outcomes, giving you this full spectrum from a pessimistic case all the way to an optimistic one. And this is what you get. You're no longer presenting just a single fragile number. You're showing a P10, which is your pessimistic case, a P50, the most likely outcome, and a P90, your optimistic scenario. This tells an investor, hey, I've thought through the risks and the potential, and that's what builds the kind of trust that actually gets deals done. So, to make this a little more real, let's look at the actual results from the platform's own tutorial. For their Serviceable Available Market, or SAM, that's the chunk of the market their product can realistically reach, the analysis came up with a mean of about $3 million. And it goes even a level deeper. For the Serviceable Obtainable Market, or SOM, which is the slice of that SAM they think they can realistically capture, the analysis lands on a mean of $1.4 million, and that's based on projected adoption rates. See? These are the kinds of grounded, specific numbers that turn a vague idea into a real, viable business case.
So why does all of this matter? Well, a tool like this doesn't just help one founder or one investor. It really has the potential to change how the entire startup and investment ecosystem works. Let's take a quick look at who really stands to benefit here. So while the key stakeholders are pretty clear, the impact on each one is actually pretty unique. For founders, it's all about getting credibility and speed. For investors, it's about making due diligence and comparing deals way more efficient. And for consultants and accelerators, it's about finally being able to achieve scale and standardization. It really addresses a core challenge for pretty much everyone involved in building or funding new companies. I mean, just think about what this really means. A founder can generate a report that would have cost thousands, and they can do it for a tiny fraction of the price and time. An investor can do a sanity check on a deal in minutes, not days. Consultants can automate all that grunt work and actually focus on high-level strategy. And accelerators? They can give their entire cohort a standardized, high-quality toolkit from day one. It creates this common language of data for the whole ecosystem.
Ultimately, what we're seeing here is AI automating one of the most painful, most ambiguous, and most critical parts of building a business. And that, of course, raises a pretty fascinating question. Once the tedious work of market sizing is solved, what's the next big bottleneck in the startup world that AI is going to tackle? That's definitely something to think about. Thanks for joining me for this one.